Italy's government agreed to a real deficit to GDP ratio of 2.4%, sharply higher than expectations, in order to bring about campaign promises of welfare spending and tax cuts. The deal has been seen as a win for the coalition Five-Star Movement and the League. Italian bond yields jumped on the back of the announcement, sending banking stocks sharply lower. Joining me now is Filippo Diodovich, market analyst for IG Italy, who's in Milan. Filippo, thanks so much for joining us. What did you make of this 2.4 deficit to GDP ratio that was agreed? It looks like it was a clear win for the Five-Star Movement. Do you think that the finance minister Tria, his position is tenable?
Yeah, as you said, it was like a big win for Di Maio and Salvini, so for the populist duo that is like in the government right now. Like the finance minister tried until the last moment to fight versus this decision to increase so much the public spending. He wanted like a deficit GDP ratio between 1.6 1.7%, but like we had like 2.4, so a really big increase for the public spending. They wanted to fulfill the campaign pledges, Di Maio and Salvini, so they wanted to have citizenship income, also pension income, also like the flat tax, so many promises that they did during the political campaign. And right now the market reaction is, as you can see on your charts, is very important. We have like a really big sell-off on the banks, also like the Italian yield, the BTPs, 10 years BTPs are like more than 3%. Also the 2 years yields is like more than 1%. So it's a very big, very strong situation right now. We have this panic selling, and as you said, it could be worse because finance minister he already said that he wants to stay at his ministry for like few months to help maintain the stability, but probably after that he could resign. That could be a really big worse news for Italy, because Tria, the finance minister, he fought very well against like the populist decision.
So aside from a potential Tria resignation, what should we be expecting next? Because surely the European Commission will reject this budget, and how likely is it that we're going to see a sovereign downgrade on the back of this?
Yeah, we have like Moody's. They decided to wait until the budget law, so they wanted to see how the fiscal targets were. And as you can see, like 2.4, it could probably Moody's is going to downgrade Italy. That could be another step for Italy to have like sales. So we'll have like other turmoils, financial turmoils on Italy. Italy could be like the target also for speculation, and that could be like very worse for Italian bank system that he tried to recover, but he still has a lot of things to do. Also, like a lot for non-performing loans selling. So we have a really very bad situation right now. We hope that it's gonna like it's gonna improve, but we have a not very good like perspective for the future.
So let's talk about the Italian banking sector a bit more. Clearly, you're concerned about the NPL issue. How do you see that playing out for markets, particularly the financial stocks?
Yeah, like for Italian banks, as I said before, they try to recover for like a really bad situation with like with this big amount of non-performing loans in their balance sheets. And right now, also in their balance sheets, they have a lot of Italian bonds. And if they have like also like a loss on Italian bonds, that could like that could be they could have a really better reputation on the market. Right now there is like a general sell on all Italian banks. A lot of Italian banks are like you cannot like short them because they are losing too much. There are some big banks, Italian banks, that are losing more than 10%. So that is going to be like very challenging. Also because in few months we will have also like the review about ECB stress test. We think that the four big Italian banks that are like right now under the scrutiny of ECB, they are going to pass the stress test, but the same, we have a situation that is bad. Also because like the Italian debt is so big that it could be getting worse. Also like the spread, the Italian bonds yield, they could increase more in the next weeks.
So bringing it back to the deficit question, I was speaking to one strategist earlier this week, and he said that a higher deficit would actually lead to more reliance on the ECB and could actually put political pressure on Chancellor Merkel. Do you agree with that assessment?
Yeah, it's like a general situation. Also, like Italy is so big that and with this difficult situation, there could be like still like a new question about a possible Italy exit. Also because there are like a party that is the government, the League, that wants to leave the euro area, because like there are like all the economical stuff close to Salvini. We call them the four musketeers of Eurosceptic, Borghi, Bagnai, Savona, and Siri. They have like a plan B for like leaving the euro area, and so that pressure is going to be like on also Merkel, also Macron. Macron also like he said a lot of stuff about Italy, more about like the anti-migrant policies of Salvini, but for sure in the next months, if Italy is gonna like keep doing these like political measure, political economic measure, there could be still like talks about like a possible Italy exit.
Filippo, thank you so much for your time.
Thank you, John.
That was Filippo Diodovich, market analyst for IG in Italy, joining us from Milan. I'm Victoria Scholar. Thank you for watching IGTV, and we'll see you very soon.
Subscribe to IG for educational content, company insight, financial analysis, and expert commentary.